Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 29th of October, 2022, and this is the weekly technical analysis for the Euro, the Cable, and the Aussie dollar for the first week of November. And let's begin with the Euro and expand this out, and you can see that it did try to break out from the channel on Tuesday and continued to test the 101 level after breaking through the parity at 1, but it could not get through this previous resistance area and promptly pulled back on Thursday with the ECB rate decision, where it was taken as a dovish hike, even though they did raise interest rate by, I believe, 75 basis points from, let's see, it was from 1.25 and then raise it to 2%. So with that, it came back down to retest the upper trend line of the channel and then close as a doji on Friday as neutral with the US PCE inflation index closing neutral. So we'll likely see an inverse relationship with the US dollar DXY, which will have to dip lower. So it did break through the 99 level, and this will now become an intermediate support level. And followed by the 98 would likely be the next key support with this lower trend line of the channel. All right. And right below that at the 62 fib retracement, that will be the next support at the 97 round figure. Okay, so with this, we're back to below this swing high, and we'll see if that's going to retrace back to the 21 and then the 38 fibs, where that's the next key support with the lower trend line of the channel. And this week, there's a number of key news with the Federal Reserve's turn to announce their rate hike, which will be likely a 75 basis point increase to 4% now. And then followed by Friday, the non-farm payroll report. So next week is going to be a volatile week. Let's take a look on the weekly time frame, and it's a large spinning top with likely swings on both ends. So it could because now that it's below parity, it could swing back down to test the 99 or even further, perhaps above the 38 fib, and we'll see if it's going to consolidate around that area. It doesn't look as if it's likely to break above the parity again. If it does, it could be just a spike. So this will provide the next support, and unless if it breaks, then that's the next key round figure that is going to test at 98. Okay, so critical news for next week with the Federal Reserve's potential fourth rate hike of 75 basis points. And let's switch over and take a look at the US dollar index as well. And here's the DXY, the US dollar index, where after a bearish close the previous week, paused below the 112 before falling on Tuesday and Wednesday as an inverse correlation with the euro, and fell through the support level of 110 and down to hit the 78.6 retracement level before bouncing off on Thursday and then closing neutral above the daily 55 EMA on Friday. So it fell through this support, intermediate support level. Let's change that to resistance now. And the 110 is likely going to be a support still. And with the 78.6 and the 109 area, it's a key support now that it has tested it. Okay, we can bring down the resistance back down lower. 138 FIB extension is likely going to be the key resistance, and you'll see if it's able to climb up to test the 112. So for the moment, it seems like it's possible to find support and try to break out higher and likely stay neutral for the week around the 111. So in between the 110 and 112 range. And of course, critical news from the US this week with the Federal Reserve and the non-farm payroll report. And looks like for now it could be also forming a bearish channel here. So let's see if it's going to move within that range. Let's expand it out. Then if it's really finding support here at a 786, then there's potentially it could attempt to climb up higher and take a couple of weeks to perhaps retest the resistance at the 138 FIB. but next week is going to be key. Okay, let's move back to the other major pairs. Let's move on to the cable with the sterling pairs really making a push up higher because of new prime minister now being announced, and it's could be a stabilizing factor and seen as bullish for the economy for the short term, and it has pushed up higher after they closed on the previous Friday. And you notice there was a massive gap up on the Monday and closing that gap before continuing on Tuesday and Wednesday. So yes, after the bullish sentiment from the previous week, it has continued higher and only paused slightly on the Thursday before closing back up for the week. So this is likely a bullish sign for the cable in the short term, and it's after breaking through this key round figure at 115. It could be a continuation move to test 117 and slightly above as well. And this week is also the Bank of England's turn to announce their rate hike of likely 75 basis points as well. And pushing that up to 3%. So this is a critical one for cable and the sterling pairs this week with Federal Reserve, the Bank of England, and then the non-farm payroll report on Friday. So this is for now an interim support. Next support is after the breakout from this upper trend line. We can be, doesn't have to be a channel. It's also consolidating in this triangle, and it broke out higher to above the triangle. So there is support from the next round figure below the 115. So 114 is let's say a key support now. And let's move the next. So this Fibonacci, we can probably adjust to likely either a continuation move here, where it has hit the 138 fib extension, and then could be a follow-on to the 162 fib extension at the 117.60 area. Or we can also move it as a fib reversal setup, where it aligns close to the 117 round figure for the 138 fib extension, and then the 162 will be above that at the 118.50 area. So we could leave this here Then I would move this up to the 162 for key resistance. And likely the intermediate resistance at the 117 and the 138 fib extension. Okay, so could be support at the 115 and potentially attempting to break out higher towards the 162 fib and likely settling around the 117. It does dip lower, there should be support at the 115. And let's also take a look on the weekly time frame. And that's a very bullish close here. So it could continue, resume next week and push up higher. All right, so critical week for sterling peso, and with all these key news coming up. Let's move on to the Aussie dollar. And the RBA is also set to announce their rate hike on Tuesday. And another 0.25% rate hike since they just had a meeting last month as well. So they've spread out their rate hikes across 2 months and a combined increase of 0.5%. So this will push it up to 2.85%. So the last round was seen as dovish since it was only 0.25, but their reasoning was because they had another meeting coming up, which is just a month later. So they spread out the rate hikes here. And after a similar breakout higher on Tuesday and Wednesday, it pulled back lower, back down to the 64 level. So it did break out higher here, and this zone will be interim support now. And the 0.65 is still going to be resistance, and perhaps I should move this up higher as a key resistance here with 0.66 and the 62 fib retracement level. And this level here at the 0.65 is going to be an interim resistance. Okay. And with major support coming from the lower trend line, rising trend line below that. That's at the 63 round figure. So the Aussie is also exposed to the Federal Reserve rate hike decision and the non-farm payroll this week. And on the weekly time frame, it is almost a doji, a spinning top. So there could be consolidation for the next week before any further breakout moves. So definitely constrained by the 0.65 and the 0.63. So yes, it could be just operating within this range and centering around the 0.64 area. All right, so do watch out next week. It's going to be a volatile week with these three central banks rate hike decisions. And then also on the Friday with the non-farm payroll report. All right, so do stay safe, have a good trading week, and cheers for now.